real estate agent to work with. You hire Zach, and Zach will help you find an awesome rental property. It's really pretty practical stuff. It's location, obviously, 3 times location. On rental properties, on single-family homes, we want to see 3 or 4 bedrooms. There's a scale to how much rent you can get based on how many bedrooms and baths the house has and what the square footage is. So I think it's always better to buy a 3 or 4 or 5 bedroom house than a 2-bedroom house. It's not that much more expensive as you scale out the rents versus the house value. I think you want to be in a neighborhood that if you don't live near it, at least you're comfortable with the general area. So a lot of times, we'll just buy in neighborhoods that we know well, or we have friends who have endorsed that neighborhood. Okay. So I think that helps just to lock in, a good long. And if you have knowledge of an area that's sort of an up and comer, and you think about the Central District in Seattle 20 years ago, like where that apartment building was by the prison, that was a dive. There were drive-by shootings. I probably still drive-by shootings, but it was a tough neighborhood. Boarded up houses. I looked at it 20 years ago. We're 2 miles from downtown Seattle. These houses are identical in style to what we're selling in Green Lake. Bungalows, cute, charming homes, tree-lined streets. And if I'd been in a position to act on that, I would have bought 30 houses in the Central District in 1990. And those things are all, so if there's neighborhoods like that you see, and it might be, Camano Island, Everett, there might be areas, Cle Elum as you head east. If you know that there's going to be a big change in the economy in Tacoma, DuPont, Lacey, Olympia, you read, you go have coffee in those neighborhoods, you understand those neighborhoods, and hopefully you can pick a neighborhood where you're going to have good rental prospects, but also, and the big winner in owning rental property is the long-term appreciation, the long-term value increase, which you can't bank on. It doesn't always happen, but in a good market like Seattle, a strong economy, odds are pretty good you're going to see some increase in value over the long haul. There's tools. Zillow.com, the real estate website, has some interesting tools and they've got 7 PhD economists down there at that company that are thinking about this stuff all the time. They're way smarter than me, and they have way more time committed to crunching data. When Zillow has a forecast for every zip code in the country, it says, hey, this is where we think values are going to be in a year, and they've baked a lot into those formulas. That's another thing that I would look at.
Yeah, so it's definitely a good resource.
Where what's the outbound value prospect based on today's estimate? Where is it going to be in a year? And especially where is that relative to some of the other neighborhoods we might be buy rental properties in? Another great way to get started in owning rental property is just you've been in your first house for a couple of years. Maybe you've had kids. Maybe you've started to feel like you've outgrown it. Maybe economically you can afford more. And you keep that house, and it becomes a great long-term rental property for you. That's what I did with my first house. Many families sort of end up by default or inertia or whatever, keep their first house, and they don't really think much about it. But 20 years later, it's paying for their kids' college, right? It can be a great thing. And the nice thing about keeping your primary residence as a rental after you move out is you've already locked in that 30-year fixed financing as an owner-occupant, and they don't increase the rate 2 or 3 years later if you choose to move out and rent it. You keep that locked-in rate at 3.5% as an owner-occupant even after it's been converted to rental use.